day all. Ira Epstein, and we are now on your financial market wrap-up. Now, something special. I'm not going to be at work tomorrow. I'm playing hooky for a day. So I will not be here on Friday, the 24th of May, but this is the 23rd, and what I've decided to do is two things. Number one, I'm going to offer a special on my charting course, and as you know, I don't do that very often, so at the end of this, you'll read about that, or see all about that. And this will be all weekly charts, like a regular weekend edition. And yeah, they can change a lot, but got to do something as we put this out. As I said, I want 4 days to myself. It'll be fun. All right. What went on today is the big question. Why did the market suddenly decide that, gee, everything is really slowing down, and the risk off mentality hit everything? Gold exploded $9. You were up sharply in the bonds and the notes. You'll see that in a minute. You collapsed in the energies, and while you're up tonight 30 cents, you were down today 6% in the energy prices, and the stock market was down rather hard as well. At the same time, the yen had gotten a pretty good bid. It's giving up a little bit of that, and so did the Swiss franc. So let's talk about what that is. Part of it, of course, is how poorly things are going on the trade talks. The other part probably has to do with what goes on in Congress and the president. The third thing, and what, by that I mean, there's still nowhere on the Mexico-Canadian-U.S. trade deal yet. Ms. Pelosi needs a couple of weeks to read it through and understand it. Of course, the president's picking on her because of that, and she's asking for family intervention on the president. Does this sound like anything you want? It's a comedy, unfortunately, not a good one. But as we take a look at the monthly area chart of closes, because this is not the end of the month yet, but for the month we're down 124 points, or 4.23% so far. So we are getting that correction. The market is looking here, if you take a look at the 18-month moving average of closes, it comes in around the 27.58 level. When we go to the weekly chart, look at how you pulled back to that 18-week moving average of closes. I always consider that when a market's over it, when it pulls back, if it hits that, it's looking for potential support or resistance. But I really use it for more than anything as a bias number. When you're over that 18-month, I say the bias is up. I'm sorry, the 18-week, I say the bias is up, and under it, the bias is down. When we take a look at a weekly bar chart, you've come here and you can see this is Christmas Eve, and look at how much you went up. So you're in your first leg of a correction. It's not the end of the earth. Is it the sell may go away period? Probably. And the reason I say it, unlike the other years, you've got this trade war looming over you, and world economies keep slowing down. Nobody's really picking up in their momentum, including us. When you take a look at the swing line structure, the market still has a pattern of higher lows and higher highs. If the market were to break through this low of 27.9975 tomorrow, still wouldn't matter. You'd go back to this number, because that would just be an extension of the swing line dropping. That would be the key number. This number, the 27.9975, comes into play if tomorrow it's not taken out and you were to finish out the week like this. Then I'm looking at that rather hard. Where's that number sitting? The 18-week moving average. You got there last week. You're again at it this week. You see that. What stopped the market? Well, it wasn't the Bollinger Bands, because you haven't hit an upper Bollinger Band, in all fairness, since last year. I don't think most people even realize that. You've hit the down one, but not the up one. When I look at momentum, I have a bigger problem. Momentum, as I see it, often leads price, and it's pointing down. So I have the market in an uptrend with higher lows, higher highs. To me, the bias of the market is still up just by a fraction. You finish 28.24, literally right on that 18-day average of closes. Very important what happens here. If this ground gives way you put in the potential for the support at the 100-week moving average and the lower Bollinger Band. When I come to the NASDAQ, it's very similar with this difference. You did hit the upper Bollinger Band, so different world there, but momentum down. The market is now finished out today at, well, it's there right now, 73.2150, which is underneath 73.35. So I've got the bias down. If you take a look, the last break low in the market was 72.76. I'm going to be able to take this arrow and have it point down on tomorrow. When I take a look at the Dow, the battleground 3 weeks in a row is the 18-week moving average of closes, and you have a market that's been void of a trend. You've got a higher high and a lower low. If prices can't hold, and I know you're going to think this funny when I say this overall rally back into the 18-week average, then you start putting the Bollinger Band and the 100-week average into play, and those numbers around 24,774 to 24,533. Some of these numbers start getting interesting as they could approach 200-day averages on the daily charts again. In the Russell, you've got the higher high, lower low. So we have a theme here. We're really not that bullish in most of the stock in the season. All have momentum pointing to the downside, putting back into play the potential, at least, for that lower Bollinger Band. In the VIX, you're caught in a very narrow pattern right now of the Bollinger Bands, which are an algorithm designed to keep the market going sideways within them. I use the word sideways. That's really inaccurate. To have the market trading within them. Sideways came in my brain because that's what I really see going on right now. I see momentum up. I have a higher high, lower low pattern. I don't have a trend. I've got a market that's just sort of drifting right there. When we come to the 10-year notes, the Fed doesn't have to cut interest rates. The market's doing it for the Fed. We got under 2.3 today in the 10-year note. Look at this, higher lows, higher highs, riding that upper Bollinger Band. It's a resistance point, and momentum is still pointing up. But I'm going to say it again. The market's doing the Fed's job. It's dropping U.S. interest rates. When I look at TLT, same thing. Higher lows, higher highs, momentum up. You're right into the resistance. I do think this is where pros are taking some money off the table. When it got up here, it did the same thing. Does it have to be this exact day? Can't tell you that, but it's rare that you just keep popping through those Bollinger Bands on these markets. 95% of the time, the market will stay within it. If we look at the dollar index, you had an outside week last week. The high last week was 97.86. 98.01 was the upper Bollinger Band. Back here, you hit that number too. This week, you hit the Bollinger Band, and now you're backing off again. I'm not surprised. Is the dollar going to be able to hold in up here is the question. The pattern is one of a lower low, higher high. Momentum is still up overall, and the bias is up since you're over the 18-week average. The eurocurrency is the opposite. Remember I told you to book that trip to Europe? Can you believe it? You're sitting here at 112 in the euro. I remember going there, and I think I was paying in the 120s, high 120s. Lower highs, lower lows, riding the lower Bollinger Band, momentum down, trend down, bias down. British pound. This is a comedy because you never know what's going on. I am truly surprised that Miss May has done such a job of holding on. Do I think her programs are going to get passed? No. Do I think that they're going to try to force her out? We'll know a lot more tomorrow because her own party's giving her drop dead dates to get out of office. I don't see anything getting passed, and the market's telling you that. The bigger picture on the weekly charts is bearish. Lower highs, lower lows. You're riding the lower Bollinger Band. You finished out today at 126.76. That's just under, about 50 points under the lower Bollinger Band. We'll see if it can stay under it at the end of the week or not. Canadian dollar. My surprise is it didn't get more of a jump when we lowered and removed the tariffs on each other. I shouldn't have said lowered. Removed the tariffs on aluminum and steel, and we're ready to make our deals. Market just isn't able to get over that 18-week average of closes. In fact, momentum is down. I've got a higher high and a lower low. I don't have a trend. In the Japanese yen, the market held the first challenge back to the 100-week and the 18-week average of closes. As I said, the fear came back into the market today. You still have an uptrend, higher lows, higher highs, but serious resistance at that upper Bollinger Band. In Bitcoin, the question is, can you stay over that upper Bollinger Band? Momentum up, trend up. This market up for the week so far, 11%, $800 an ounce. That's a coin. I'm so used to ounces, a coin. Then we get to the energy sector, which is pretty wild right now. You've got so many conflicting things. You've got Iran with the U.S., and then our acting Secretary of Defense today asked for 10,000 troops to be sent to the Mideast. The president meeting this afternoon. I don't know what he's going to agree to, token amount of troops or any amount of troops. And of course, you've got Iran with the U.S., war of words, but now these ships are there. Where do you go? The other part of it is, with the world slowing down the economies, what is the right amount of supply to keep prices up? Right now, Brent is gaining on WTI. That's what that spread shows, which makes sense because the oil that's endangered in the world from possible skirmishes is the Brent. On the other hand, when you come to the weekly chart, lower highs, lower lows. That's a downtrend. Until you take out this week's high, the market first to challenge the 18-week. The next number is 66.56. The 100-week, you've got momentum pointing down there. The close at 68.01 is still just above that 18-week average. So you haven't confirmed on the weekly chart a downtrend. You need to get under that. You confirmed it in WTI. Lower highs, lower lows. You got up to the upper Bollinger Band right here. It wasn't the high of the market. You came back to challenge that up here, but that's where I think the pros began coming out, and this market became what I thought was a crowded trade. In other words, so many people talking higher and higher. Well, if the world's slowing down, be careful. If you break from here hard, do you go to the lower Bollinger Band, or do you just fight the resistance here at those two key averages? Rebob gasoline. I admit to being surprised. The trend is turned down on Memorial Day weekend. Lower highs, lower lows. I remember the prices would go up at this time. If you continue further, while the bias of the market is up, I can't say this trend is locked in because prices are over the 18-week average, but your big supports, 182.40 to 181.90. Momentum basis the oscillator of slow stochastics is down. Heating oil. You failed at the upper Bollinger Band. And in my charting course, I teach the importance of the first time that you hit Bollinger Bands on the upside or downside. And what I teach is when you hit that is where I think the smart money tries to get themselves out. And as I said on my charting course, I have a special. I rarely try to lower the price of my course. I think it's worth so much more than these courses that cost crazy amounts of money. If you like what I do here, why not learn exactly how to do it yourself? And one of the things I do in my course is on a lot of the videos, I take off the name of the chart. Completely, it's blacked out. Because it's about patterns. It's about learning the 5 steps that I teach. And those steps are swing lines, the first step to what a trend is. Then you filter it with moving averages. Next, you're looking at momentum in the market. And then I have not one, but 2 profit-taking indicators. Bollinger Bands in window envelopes. You don't see me put on the window envelopes here. There's lots of reasons for that, but I want to keep it in my course. My video subscribers in the morning all see the window envelopes, and I think they realize the importance of them as to where they go. So what I do is I put this into, number 1, recorded videos. There's 54 of them, so it's not a short course, but it's also not meant to take you a long time to get through. Typically, our students can get through this in less than 2 weeks, real easy, with a little effort, very little effort. They're able to do it. The key is you keep doing it, and it opens your eye up to an idea of how it works. Included in the course, if you haven't tried our charting software before, that's included. That by itself is a $100 value in most cases. Then my research, I charge $60 every 30 days for it. That's $160 right there. I haven't put the value of the videos that make it all work. So you keep adding it, and I think you can see what it does. My normal retail price is $169.95 now for a very short period. Just go to our website. Under the word education, Ira's charting course, you don't need a code or anything. It's $99.95. It'll start, get you on all this information, and away you go. Hope you like it. I will be back Tuesday, enjoying my 4 days. You enjoy yours. I'll see everybody Tuesday morning.